Hi, welcome to Trader's Diary. This is my journey to become a better trader. The biggest mistake that cost me lots of time and money is not knowing which trading styles work better for me. Trading became easier and I traded more efficiently and profitable since I found the trading style that suits my personality and circumstance. In this video, I will share what I call the me strategy, minimum effort, maximum effect strategy. First the basic version and then the advanced version at the end of the video. I hope this video will help you find your own trading style and strategy at the start of your trading journey and save you time and money. First, identifying the start of a trend, either up or down, doesn't matter. The strategy works either way. Every trend of any asset has its internal logic or pattern. In an uptrend, the distance from the bottom of the first green candle at the start of a trend to the top of the last green candle before a pullback is called amplitude in technical analysis. I call it the rhythm of a trend. After the pullback, the moment a candle closes above the previous high, this would be entry point. And I use the rhythm to measure the next high or target. Now this is the support and also where I would set my stop loss. As long as the position is not stopped out, I just wait for the target to be filled. I trade mostly on day charts. Checking once a day is what I would do. When the first target is filled, wait for the pullback and the price to rise above the new high. Now I would estimate the next target using the same rhythm again, and move my stop up to the new support. I will repeat this process until my stop is triggered. That's it. The strategy is really that simple. Before continuing to the advanced version of this strategy, it is important to point out the real challenges in becoming a consistently profitable trader. In my experience, they are being the right kind of trader that is most suitable to your personality and overcome two fundamental human natures, fears and greed. If you're already familiar with trading psychology, skip to the advanced tips of this strategy at 10:50. I did terribly in my day trading phase, because trading on a 5 and 15 second chart live was too intense and too much pressure for me. And trying to sit in front of the screen during the fixed market hours every day simply doesn't work with my family circumstances. As a result, I was overrun with pressure to win and fear of losing trades while trading and eventually even when I am not trading. Of course, my fear eventually becomes my reality. I keep making losing trades. On the other hand, my capital is too small and I am too impatient to be a long-term investor like Warren. Just watching the non-realized profit growing in my trading account was like playing computer games. It was giving me the mental kick but not fulfilling my practical financial needs. Swing trade works well for me. I can follow my trades whenever I am free during the day, not fixed to the market hours. It is not a problem if I don't check in on my open trades for a few days if I don't get a price alert. And I can draw down and use the profit for my material needs. I encourage you to first find out the best type of trader that suits you if you haven't. It will give you a head start in overcoming fears and greed's influence in your trading. Everyone has fears and greed. They are part of basic human natures. Without them, we would probably long be extinct on Earth. A healthy dose of them keeps us away from danger and motivates us to better ourselves. More than a healthy dose, they can ruin our life. Some typical mistakes among traders. Sometimes traders can't bring themselves to enter trades due to fear of losing and then regret afterwards when they see the trade going the way they guessed. Some traders place trade without doing the due diligence due to FOMO, fear of missing out. Often ended up being on the wrong side of trade and losing money. Blinded by fear of losing, some traders keep holding on to their losing trades and fool themselves by believing the market will turn around tomorrow, only to run up an ever bigger loss at the end. Some traders let greed overtake rationality, leaving their win on the table, wishfully thinking it will endlessly get bigger. Even when their win starts to shrink, or worse, become a losing trade. Instead of accepting being on the wrong side of trade, keep adding more positions to average out the losses. I have made all the above mistakes and lost money. I have implemented the following to overcome fears and greed's influence on my trading. Know the risk and profit target before deciding to enter into a trade. Always set stop loss at the start of every trade. Take profit off the table when the profit target is reached. Market is always right. Take a small loss and move on. Keep a trading journal to keep myself in check on all of the above. In the basic version, the stop is at the first support below the entry and stays there until the target is filled and trade is closed. Sometimes, the trend continues further. In the advanced version, I use the rhythm to estimate the next target and shift my stop to the new support to protect unrealized profit. During an explosive move up or down, I follow the rule of 3 days low or high as my stop in order to profit as much as possible from such steep price movements. If the price action in the chart is too choppy, it is difficult to establish the trend's rhythm. I will look to find the rhythm in the next higher time frame. To fine-tune the stop level, I look for the last consolidation price range before the breakout. Then switch to hourly chart, set my stop loss just below the range. It works the same in a downtrend. Stop is set just above the range. That's all for today's video. Write in the comment below if you have questions on the strategy shared here. If you find value in this video, please subscribe, like and turn on the notification bell. Let's get better at trading. Thank you for watching.